Welcome to the Deep Dive. Today, we're really plunging into Australian work-related car expenses. Now, this is a topic, well, many of us think we've got a handle on it,
Uh,
but actually, small misunderstandings here can really hit your tax refund. So
yeah,
we want to simplify the rules, the methods, make sure you're not leaving money on the table.
absolutely.
hmm
Our goal in this deep dive is really to pull out those crucial insights from your sources, help you navigate, the complexities of compliance with the ATO, that's the Australian Taxation Office,
Right.
and ultimately just empower your financial decisions when it comes to your car and, well, your taxes.
Okay, so let's unpack this then. Before you even think about claiming a deduction, there seem to be like three golden rules. First, the expense. It must be personally incurred.
Yes, personally incurred, and this is critical because people often mix up an allowance with a reimbursement.
Ah, right. That difference
It
matters.
really does. If your employer reimburses you for an expense, well, you can't claim it. But if you get an allowance, maybe a set amount per pay period, and your actual costs are higher,
You can claim the difference.
exactly, you can claim that difference.
Yeah.
It's a distinction that honestly surprises people, but can save you real money.
Okay, so that's number one, personally incurred. What else?
Second, the expense has to be directly related to earning your income. Makes sense, right?
Yep. And third,
Records. You absolutely must keep records. We'll talk more about that, but it's non-negotiable.
okay. Now, you mentioned the ATO's definition of a car is quite specific.
Yes, it is. What's fascinating here, your sources define it as a motor vehicle, but pointedly, not a motorcycle. It has to be designed to carry a load of less than 1 ton
Less than a ton.
and fewer than 9 passengers. So your standard car, SUV, usually fits.
But what if you drive something bigger, like a heavy-duty truck or a minibus?
Good question. If it falls outside that definition, say a heavier ute or a van carrying 9 or more people, it's classed as an other vehicle. And for those, you're stuck with the actual costs method.
Which sounds more complicated.
It is much more complex. It means tracking every single cost: fuel, oil, repairs, insurance, the lot. Very detailed records needed.
Wow, okay. So that definition matters. But back to the personally incurred point, that allowance versus reimbursement thing feels like a potential game changer for some listener.
It definitely can be.
All right, let's get practical. We all drive, many drive to work. So, what travel actually qualifies? Can I ever claim my daily commute, or is that just wishful thinking?
Mostly wishful thinking, I'm afraid.
Hmm.
Generally, your regular trip from home to your normal workplace, that's private, not claimable.
Unless, there's always an unless. Right?
There is, but it's tough. The bulky tools exception. We're talking really cumbersome gear, think specialized trade tools that you can't store securely at work, and your employer requires you to transport them.
So, not just carrying a laptop bag.
Definitely not. Most office workers won't qualify. But there are clearly claimable trips, driving between 2 separate jobs, for instance,
Okay.
or travel during the workday. Say you drive from your main office to visit a client, then back. That's claimable.
Right.
Or driving from home, but directly to an alternative workplace for a specific task, not your usual office, but somewhere else you have to be for work. Those journeys count.
Got it. So it's not the commute, but it is travel that's part of doing the job itself or between job locations.
Precisely.
So we know what expenses might qualify and which trips count. Now, the nitty-gritty. How do you actually calculate the deduction? You mentioned two main ways.
That's right. 2 primary methods. First up is the cents per kilometer method. So, definitely the simpler option.
That sounds good. How does it work?
For the 2024-25 financial year, the rate is 88 cents per kilometer. You claim that for your work-related travel, but, and this is important, it's capped.
Capped at.
5,000 work-related kilometers per car per income year. So the maximum claim using this method is, what, $4,400 per car?
And that 88 cents covers everything. Fuel, insurance, wear and tear.
Yes, it's an all-inclusive rate. Covers depreciation, registration, insurance, fuel, repairs, everything. The beauty is, you don't need receipts for all those individual costs. You just need a way to show how you calculated your kilometers, like a diary or using an app. A reasonable estimate is required.
88 cents per kilometer, capped at 5,000 kilometers. Sounds straightforward, but
Right.
here's where it gets interesting, right? What if you do loads of work travel? Way more than 5,000 kilometers. Do you just lose out on claiming for those extra kilometers?
No, not necessarily. That's exactly where the second option, the logbook method, comes into play. This one lets you claim the business use percentage of all your actual car expenses.
Okay, business use percentage. So you need to track personal versus work trips.
You do. And this requires more effort. You need to keep a logbook for a continuous 12-week period.
12 weeks? That sounds like a bit of work.
It is initially. But the good news is, if your driving patterns stay fairly consistent, that logbook can be valid for up to 5 years. You just need to record the details for every single trip during those 12 weeks: date, start and end, odometer readings, kilometers traveled, and the reason for the journey. Was it work or private?
And then you also need receipts for everything.
Yep. With the logbook method, you need proof of all your expenses. Fuel, oil, servicing, repairs, insurance, registration, loan interest, even depreciation.
Depreciation, right.
And speaking of depreciation, there's a car limit to be aware of. For the 2025-26 financial year, it's $69,674. You can only calculate depreciation based on this amount, even if your car costs more. This can really impact the claim for more expensive vehicles.
That's a key detail. And what about electric cars? You mentioned something for EV and PHEV owners.
Yes, for charging at home. From July 3, 2024, there's a simplified rate of 4.2 cents per kilometer you can use to calculate the electricity cost if you're using the logbook method. Saves tracking exact electricity usage for the car.
Okay, so logbook. More effort, potentially higher claim if you have high work use and significant expenses. But it's not always better, is it? I remember that example from our sources, Alex the consultant.
Ah, yes, Alex. That's a perfect illustration. Alex calculated the claim using both methods. The cents per kilometer came out at $3,960.
Okay.
But the logbook method, even with a decent business use percentage, only resulted in a $2,700 deduction.
So cents per kilometer was actually better for Alex despite maybe having higher work use.
Exactly. It shows you really have to run the numbers for both methods based on your specific situation. Don't just assume logbook is superior because you drive a lot for work. Sometimes the simplicity and all-inclusive rate of cents per kilometer wins out, especially if your running costs aren't that high.
It's a common trap, isn't it? People think more driving means logbook, but it depends on the actual costs.
Precisely. The effort of the logbook might not pay off financially.
This has clarified so much. It can be such a confusing area. But okay, one final, maybe critical warning. Record keeping. You mentioned it earlier, it can feel like a massive hassle. What's the absolute bottom line here for our listeners?
Look, the bottom line is this. The ATO conducts audits. It happens. And if they audit your car expense claims, the burden of proof is entirely on you.
Meaning you have to back up every dollar claimed.
100%. You need to keep all relevant records, logbooks, receipts, diary entries, calculations for at least 5 years after you lodge your tax return.
And if you don't have them?
If you can't provide that documentation, your deductions will likely be disallowed. You might face penalties. And you'll probably have to repay any refund you received based on those claims. It's really not about the ATO trying to catch you out. It's just about verifying that the claims are legitimate.
So no records, no deduction. It's that simple.
It really is.
Right. So understanding these rules, knowing the methods, and crucially, being meticulous about your record keeping, that's absolutely key to making informed decisions and, well, securing the tax refund you're genuinely entitled to.
Absolutely. And it's vital to remember this diligent record keeping. It isn't just some annoying chore you do to avoid trouble.
No.
No, think of it differently. It's your direct pathway to maximizing your financial outcomes. It ensures you're fairly compensated through the tax system for using your personal vehicle for work.
That's a great way to frame it. Make the records work for you.
Exactly. And maybe consider this. There are loads of digital tools now, apps specifically designed for this. They can make tracking mileage and snapping photos of receipts almost effortless. It can really transform what feels like a burden into just a simple, streamlined process. Maybe that's something for you to explore.